Hello there, Maverick traders. This is Rob, and I'm joined by Ankit Sharma. This is the Currency Room, and we finally have some volatility back in this market. We are very, very happy to see that. Whenever you're trading directionally like we do in Forex and crypto, it's all directional trading, you need volatility. So it's here. Let's have a little round of applause, and let's go take advantage of it. In this session, we're going to cover what happened last week. Lots of news last week. Big question is, did we get a technical change? We're going to take a look at the charts, and I'm not going to blow anything yet. We'll just take a look at the charts. And then, of course, we always go through all the currencies, score them from +3 to -3, letting us know where to go long, where to go short.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We had our first serious pullback that we've had in the markets really in 5 months. This is the first time we've pulled back to the 50-day moving average, and it came on the CPI report. Now we're going to talk about all these reports. We got a lot of reports this week, and they were mixed, but overall the markets went down more than they went up. So that's kind of telling us what the market thinks about it. With that hot CPI report, we saw the dollar crank higher, we saw bond yields go higher, and gold, holy cow. Take a look at that chart on gold. Gold is on fire. So everything is telling you risk off, risk off. All these moves are risk off. And now we're starting to see the equities really start to fall. And again, risk off is not good for crypto. And we saw the crypto extend their losses as well. Lots of stuff happening on the calendar. Let's talk first about central banks. We had 3 central banks last week. We had the RBNZ. They came out and actually surprised the market with their hawkishness. They came out last month, they came out and said, hey, you know what? We're going to be dovish. And then the Kiwi just fell for like 6 weeks straight. And this time they came out and said, hey, we're not going to be as dovish as the market thought. And the Kiwis had, again, a small bounce back. Look, it's still gone down because it's a risk-on currency, but we'll take a look at it against other risk-on currencies. It actually had an up week. We also heard from the Bank of Canada. The Bank of Canada came out and said there is a possibility. They left the door open for a June rate cut. And then we heard from the ECB, and the ECB basically said, we're going to follow our script. We're looking to cut rates as well, and we're looking to be earlier than the FOMC. So 3 central banks, and you can see that the Kiwi was really the only one, and all they did was walk back their dovishness, but the other 2 central banks, dovish. Remember, whenever we're talking about central banks, it's relative to other central banks. When we got into after COVID, when every central bank was cutting, it didn't matter. They were all cutting. And so there wasn't one that was stronger than the other. And then all of a sudden, the US started raising rates faster than everyone else, and the dollar started to appreciate and take off. Same thing here. They're all saying they're looking to cut rates. The question is, who is the most aggressive? And the only central bank that's already done it was the Swiss National Bank. Ankit, what's your bet on the next central bank to cut rates?
I mean, that's a good one. I personally can't really put a finger on anything right now. If I really have to take a guess here, I think maybe the RBNZ or the RBA. But again, at this point, it seems like a global effort than an individual country. But what we have to really do is take a look at what inflation is doing in those individual countries. For example, like Canada, the inflation hasn't been that of an issue as compared to the U.S. So I know that next week they're coming out with their statement as well. But I think if I take a look at it, like outside of the U.S., we really haven't seen this uptick in inflation. So which really makes the FOMC on a hot target here compared to the other central banks.
Well, I'll pipe in with my bet. My bet is the next central bank to cut rates is either the ECB or the Bank of Canada. I think those are the most likely banks at this point to be cutting rates next. We'll see what happens in their currencies. But again, that's just my my bet. Again, this is what we call cocktail talk at Maverick. It's fun to talk about, but the price action is going to tell us where it's most likely. Let's talk about the CPI. We had this CPI in the US much, much hotter than expected. Take a look at those numbers. The market gapped down, stayed down, and then on Thursday we got the PPI, much better than expected, and you can see the market had a little bounce back. I did the end of day video for our stock and options group, and I said, look, we've had CPI down, PPI up. Friday's candle is going to tell us what the true story is. And when on Friday we got some bank earnings that didn't really help the market, and the market had a down day on Friday, really kind of cementing the whole week that this is going to end up being a down week. And the big question is, did we change technically? Out of the UK, we did get GDP, and the Bank of England came out and said, hey, you know what, we see some signs that the England economy is not as weak as it was. Now look, they've been very dovish. That doesn't really change anything. Let's go in and take a look at the numbers. Let's take a look at the charts because, as we said earlier, everything else is just cocktail talk. It's fun to talk about, but we trade the charts. This week, we had S&P down almost 2%, VT down 2%, crypto got hit, gold up, oil down, but look, oil is up at $86 a barrel. That's a solid price for oil, very bullish in the energy sector. So as you can see, a lot of these things, higher oil, not great for economic growth. Higher interest rates, not great for economic growth. One of the reasons why we were seeing this pullback that we saw in the S&P. Now, I just want to dissect this whole chart here just to give perspective. We've had just a amazing uptrend here. And you can see every time it came down to the 20-period moving average, it bounced. Bounce, 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 bounce. For the first time, we kind of failed here. We tried to put this bounce together on Friday. It held for 2 days, but you can see we sunk back down. At this point, this is our first test of the 50-day moving average since November. What's going to happen? I have no idea. All right. Now look, this is where I love to kind of shock people because I've been doing this a very long time. And you guys have heard me. I'm very, very bold on my calls of this is what's going to happen, this is what's going to happen. Guess what? There's sometimes in the market where I could flip a coin and it would be just as good as my opinion. This is one of those times. I think, look, 50-50 on Monday, we either bounce back on Monday or we have another red candle and it really goes to hell. Which one's going to happen? I don't know. Ankit, do you have a crystal ball here on what happens Monday or next week on the S&P?
Absolutely not. And, I even try not to pretend that I have a crystal ball. But what we can do is we can just follow the technicals and see what the price action is telling us. And despite of doesn't matter what we think, is it bullish, is it bearish, price action is the king here. So based on this chart, it's just telling us that, hey, it's at a critical support line here between the 20 and the 50-day moving average. If it breaks that 50-day moving average, again, it's going to be a little more bearish than it's bullish. So I think if you're on the bull side, this is where you got to be very cautious. And if you are on the bearish side, I think this is where you need that confirmation that it is going to break that support. So I will kind of lean this on to the early next week and see what happens. The dollar looks pretty bullish. The yields look bullish. But at the same time, the market, the price action, the equity hasn't been as bearish. But we're definitely getting a bearish close today. So I think there's a little bit more downside risk here. But I think I'll lean on to next week and see what happens. And once we break that support, I think the trend score will then turn from a -1 to a -2. And I think it will be pretty clear for me to be looking at more bearish opportunities than the bullish ones.
Yeah, for the first time, our trend score is no longer bullish. It's no longer bullish, so it's you need to start to get defensive when the technicals change. So the technicals have changed. They're not flashing a red light, meaning go ahead and go short, but we're getting close to that. This week, the dollar was the strongest currency, and the Aussie was the weakest currency. Now, this is just a reversal on this Aussie. The Aussie's been very strong over the past 2 months, and it had a reversal. Remember I said that the Kiwi actually had an up week compared to everything else. Look, it wasn't up against the dollar. It wasn't up against the currencies of safety over here. But after that, it was the best currency. I no longer like the Kiwi as the best short out there. It's showing me that it's likely going to outperform all the other risk-on currencies. And as far as crypto goes, Bitcoin Cash had a huge run, and Bitcoin Cash did what Bitcoin Cash does. It gives it all up. Turned around, gave most of it up. Look, this is just how this crypto works. You have to understand it has huge moves up, and then it turns around and has huge moves down. Outside of that, look at that. Bitcoin, Ethereum down 2%. That is a very, very mild move. And frankly, that is quite bullish. I'm not saying go out and buy, and we'll take a look at the chart. But what I'm saying is when the markets tank, well, they didn't really tank this week, but we're under pressure. These two cryptos held up very, very nicely. We always look for that outperformance when it comes to what's going on. So for the first time, we do not have a +1, +2, or +3 on markets. Look, it's a -1. I think this is more of a 0 because I'm waiting for confirmation. I think early next week, if we get a bounce, even if we go down and pierce through the 50-day moving average and get a bounce, that to me is still, the uptrend is still intact. What we really need to see for the uptrend to not be in track is if we get something like a breakthrough and then a rebound back and then it fails terribly. That's a very bearish pattern. At that point, the 20 and the 50 will probably have crossed. Those are real confirmations that, hey, we are now no longer in an uptrend, we're in a downtrend. At this point, all we can say is we're no longer in a strong uptrend. That's all we can say. It is either going to be sideways or it's going to be down. We don't know which one. We're just going to be waiting for confirmation on that chart. Then we should look at the bonds here. This is a problem for bullish equities. 4.6% on the 10-year bond is a problem. We did give some back. Next week, if the bond market drifts back down, the stock market probably gets some footing. But if the bond yields keep going up, it's going to be some real problems for risk on. And again, real problems for risk on stuff like crypto. As you could see here, we have not broken out to new highs, and we're now coming back down to these lows right there. If we break through, next stop is 50-day moving average. After that, it is bearish cryptos, at least as far as technicals go. Next week on the schedule, we've got a few things I think are going to be big. We've got claimant count change out of the UK. So we got employment report out of the UK, Canada CPI. This one I think is the best trade as far as a news event. This could be the thing that says that the BOC is going to cut rates in June. And if they do, I think the CAD is going to struggle. There's no chance, I shouldn't say there's statistically very little chance that the FOMC cuts in June. So I think dollar CAD here makes a lot of sense if this report comes out weak. We also get inflation out of New Zealand, and you can see they're looking for a tick up in inflation. If this comes in at 0.6, I'm telling you, this is going to say there's probably the floor is in on the Kiwi after having a really lousy first quarter of this year. Aussie employment on Wednesday, and then you can see after Wednesday, there was really nothing on the schedule. So the news cycle is really active early in the week, but really fades off later in the week. Personally, I like early this next week. I think Sunday, Monday, Tuesday, Wednesday are going to be great trading days. Not too sure about Thursday, Friday. And yes, I did say Sunday. Now, everyone here at Maverick knows that I rarely trade Sunday nights. Rarely trade. Probably 3-4 times a year. This is one of those Sundays that I think could be a really good trading day. I don't trade them because there's lots of false moves, low liquidity. I'm just uninterested in playing that game. But when there's big moves, big liquidity, hey, you know what? I'm ready to play. I think Sunday night is in play for sure. Let's go through each one of the currencies one by one. I'll go through crypto and Coleman, Jesus. Let's go through the currencies one by one. I'll go through the cryptos and Ankit will go through the Forex. First up, Bitcoin. I don't hate this chart. I don't hate this chart. Look, it's not telling me to go out and buy it here, but look at this. I mean, we've got a lot of good things working for us. We've got a base, but the things I like is the bottom of the base. The bottom of the base is actually making some higher lows. That's actually quite bullish here. I am definitely not ready to buy here. There's a lot of pressure on these markets, but if we get an up week next week in equities, I've got no problem here with any of our traders taking a long here in Bitcoin. Moving on next to Bitcoin Cash. This thing is not my favorite trading crypto. It's just not. It's pretty neurotic. It has big moves up, big moves down. Sometimes they come out of nowhere. This was actually a pretty decent trend for Bitcoin Cash. Usually, you get this move on Bitcoin Cash that you can't really catch because it came out of nowhere. This was a good move here. Pulling back. Got to see some support here. Maybe all the way down to, 480 is going to be the next support level. We'll have to wait and see. We'll have to wait and see on this one. I would still rather be in Bitcoin than Bitcoin Cash. Ethereum, the chart just doesn't look good. Compared to Bitcoin, it's just not the same. It's not really looking to base. It's looking to be more in the middle in a wedge. For me, I'm not looking at all to be long or short in Ethereum. Litecoin, surprisingly, has been something I've traded lately, and I don't trade it very often. It was showing some relative performance to everything else. Right now, it's having a pullback. Does it hold this 50-day moving average? If it does, okay, I'll look at it. But if not, I've just got to say it is not going to be the play. As you can see, the Bitcoin chart looks the best in crypto. Okay, will you take us through Forex?
Absolutely. Let's just start with the good almighty US dollar. And again, this is a currency that we talked about last week where, we said this could be a big week for the dollar, either to the upside or the downside. And clearly this has broken out. Both on the trend and velocity, it's a +3. So this is a currency you only want to trade on the long side, not on the short side. Again, we are at the levels back in November. So it has recovered some serious ground since, pulling back in November, December, and even early January. So everything looks pretty good for the USD. And right now, just want to, any basis you want to look into would be a good buying opportunity. And even on velocity, we can see we had a very nice base before we broke out. So we're going to get similar price action into next week. We want to see some breathing happening, maybe some little pullback. But I think those pullbacks could be short-lived. In a strong direction, that's what we look for. Now, on the other hand, the Japanese yen, well, it wasn't as strong to the downside, but then here we are catching a bit of a relief. I think what's happening is a bit of a risk-on and risk-off sentiment here. Now it's a risk-off sentiment because we are seeing the equities pulling back, and it's just also helping the yen rally in the short term as well. So I think overall, don't really love the yen here. The trend score is 0. So let's move on to what else is moving. And talking about the direction, look at the Swiss franc. This thing, again, has been a -3 to -2. It is catching a bit of a relief rally here, but realize that it's still in that downward trend, still below the 50. So is this a bear rally? And I think that's what I'm really looking into it next week. For now, it's not a trade because velocity is pretty strong. If the velocity falls back in line with trend, I will be right away jumping into some of the Swiss franc crosses, especially the dollar Swiss franc is the one that I'll be looking into. Compared to that to the euro. Euro did pull back as well. So from technical standpoint, it has lost some of its bullishness. It's at a -1, but realize that it's right at that 50-day moving average. So it is looking a little bearish, but it looks like there's some support coming in. This is on the watch list for next week. If the euro pulls back further, or does it rally from here or bounce from the support here? So right now it's no trade because the trend and the velocity is at -1. I think there's better things out there. And with this small sort of a divergence here, take a look at the pound. Pound is also going sideways here. So this is, again, 0 on the trend and -1 on the velocity. Again, I think there's better stuff out there that's moving. And talking about bigger movements, take a look at not just the CAD, but we'll just jump into Aussie and Kiwi. But look at CAD. CAD's not gone anywhere. I think the focus goes back onto the Bank of Canada next week. And if the inflation number comes out weaker, I think there's some divergence to be taking place between the USD and CAD. But right now, as you can see, there is a divergence. Dollar rallied, but CAD did not. So it all comes down to next week. If the CAD inflation number picks up as well, I think there's a decent chance for CAD to rally as well. So I think CAD is right in the middle here, not really leading one or the other. But I think after next week, we'll probably have a better idea. But the Aussie, I mean, take a look at a big turnaround on this one. This was one of the bullish currencies in the Aussie, and now it's below that 20 moving average. Again, this is a good example of how quickly things can turn. And right now, with the stronger dollar, it really weighed down on some of the growth currencies. And that's why Aussie's taking a biggest hit, along with that risk-off sentiment in the markets. So we went from bullish now to turning sideways here. Again, the trend score is still a 0, so we don't want to be jumping on the gun here. We still have this window between the 20 to 50 where we can see some support. But right now, the price actually looks pretty weak. If the market stays weak, as you can see the velocities at -3, I will continue to look for some of the bases of bear rallies. Again, beautiful setups that happened. On the velocities, you can see it just went sideways, based a little bit, and just rolled over. So velocity is just telling us the short trade is not over. I think there's still room for further to a drop there before we can find some reasonable support. And then lastly, the Kiwi, which again, following the same sort of pattern here. You can see it was a bear rally, and now we're just slowly rolling over. This one never got above the 52 moving average. So once it breaks below that 20 moving average, this can easily retest the April lows. But right now, you can see on a velocity score, it had a nice little bear rally. It's just sitting at the support here. But again, a further drop of that level, I think, then continue going forward soon. So again, right now, getting some nice setups here. But again, timing-wise, want to wait early Monday or Tuesday to really pull the trigger, starting with Bank of Canada and looking at some consolidation to come in play with the dollar before we can take another run higher. So back to you, Rob.
Let's take a look at what their scores are. As you can see, we don't like it when anything is between +1, -1. So we're looking at these on the trend. And these are the things, again, the longer term, where they are in their longer term trends. As you can see here, there's a whole bunch that's gone back to this middle. 4 weeks ago, we had almost everything at +3 and +2, or everything at -2 or -3. We just are at a little inflection point here. So as you can see, dollar Swiss franc jumps right out at us on a longer term trend. But if we look at shorter term, what's happening right here, right now, dollar Swiss franc, they're both rallying, and both rallying hard. So we don't really want to touch that pair until that Swiss franc weakens. Short term, the Aussie is seeing the most selling early on next week. Look, this week is a week of when you're trading Forex, you're trading equities. And Anka, would you agree with that? Like, if the equities bounce, then all of a sudden some trades make sense. And if the equities don't bounce, then some trades make sense?
I think so. There are times that we see that the currency market kind of does its own thing and the equities is its own thing. And then there are times where you see this good correlation in place. And I think if you look at the price action this week, that correlation is back, where the equities and the risk sentiment has this, had a bigger impact on growth currencies. So that kind of really matches up here. And then we have the yen and the Swiss franc, all the safe haven currencies are rallying. So I think right now that trade seems to be back, which is why I think it's important to pay attention to both the equities and the currencies and see if that kind of continues. Because again, if the market bounces on Monday, I won't be surprised that we get a bit of a rally in the currencies. Like some of the beaten down currencies so far today or this week, I think might have a little bit of a breathing room as well. So I think, yeah, this is a good time to take a look at both to make that decision.
All right, so let's talk about scenarios. Market bounces next week. I still like dollar, even though dollar probably does sell off. But as far as my favorite currencies, I actually have to go with that Kiwi. I know it's a -2 on velocity score. We've creeped back up to +1. If we have a risk on move, That's probably where I'm going to be looking first, but I need to see it move more up into the positive. That's really all I have for a risk on move for next week. Risk off move is pretty simple. It's Aussie dollar. It's Aussie dollar. It's dollar CAD. I think those are the trades. So let's take a look at some of those pairs, and then we will figure out what it is we're looking for with some price points. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? I'm going to start off here with Aussie dollar. I think this is the first place you want to take a look, and you can see the Aussie, even though it's been strong, the dollar's been strong as well. So we haven't seen that big rally on the daily chart. And we were just in a sideways trend for really about 3 months. And you can see we are in critical areas of breaking out of this range. If equities continue to drop, I think this one's a no-brainer. And honestly, like, it's ready to go right here, right now. So 64.50. Like, I'm not going to be looking at this until Sunday night. I'm not going to be looking at this, before that. I think this trade makes a lot of sense. The other trade I like, but I want to wait for that Canadian CPI. I think dollar CAD. I think dollar CAD makes a lot of sense as well. It's running, and I think it can run all the way up to this 139 before it hits the next resistance. I think this one's got some clear skies here, but I want to wait for that Canadian CPI. That Canadian CPI is weak. I think the Bank of Canada cuts in June like they indicated, and there is no cut on the horizon in the US. So those are my favorite early this next week. But I tell you what, if the market rallies, this is the pair I like. I like CAD Swiss franc. Here's the daily chart. You can see we've been kind of building here. We've got a little bit of an upward slope here. It's coming down to the bottom of this range. When things are in ranges, I love to buy them at the bottom of their ranges, because then if I do get a breakout, I've got a great cost basis, and I can really, add on to it and pyramid. I like this one, but I need to see, again, equities rally, equities hold rally, and at that point, my guess is it'll be up in this 54.50 range. I think taking half position when it breaks out, take the other half. This is my risk on trade. This is my number one risk on trade, but it's predicated on the market holding in and going back to being a bullish market, which at this point looks fairly doubtful. Ankit, what do you want to take a look at?
Hey, Rob. Yeah, exactly. I mean, I got some of the pairs that you're looking at. I had the same on the watches as well. I want to highlight some of the trades that I'm looking at. Dollar Swiss franc. Again, looking at if the Swiss franc weakens up, again, we'll see that in the velocity. But take a look at this one. It's a beautiful setup here. I know it's not ready to pull the trigger yet because velocity is not matching. But if I stick with the trend score, it kind of matches there. So this is goes back into the whole, the direction that's in place. And I just like this. This hasn't run yet, but this is the one that I will be paying attention to early on next week. I think another possible trade for me would be the Canadian dollar. And we can take a look at Kiwi CAD. Looking at either or, I mean, I'm really split halfway here. What's going to happen, but you can see that this thing does have a room for either to drop or to even break out, one or the other. But I think the CPI would likely drive some of the Canadian dollar move. So I'd like to be both prepared for both possible scenarios, bullish CAD and bearish CAD. And I think for some of the pairings, I like the Kiwi CAD or even the Aussie CAD here as well, depending on where the markets are at that time. So again, right now, beautiful setup there. I also want to highlight the Aussie Kiwi. I know that's the trade that has worked out for a lot of traders for the last month and a half. but that seems like it kind of coming to an end here. So this is where I think you really need to pay attention to Aussie and Kiwi currency cross as well, because for the last month and a half, the Aussie has clearly favored to the upside compared to the Kiwi. But I think at this point, maybe we can see Aussie sort of underperform the Kiwi here. So important one to pay attention to as well. And I think this is where there's more room for correction in some of these Aussie crosses versus the Kiwi cross. So pay attention to that as well. But like Rob said, the dollar CAD is the one that really looks good over here, but we have a clear resistance coming up on dollar CAD at 39. So that will be another trade that, looks great, but it looks extended to me here. So we are closing on some good technical levels towards the end of the week, but as the next week starts, I think we just have to look for some basing setups or some bull pullbacks to really get back into those trades that are running directionally. But at the same time, paying attention to the equities, because that will have a lot of impact on what the equities, what the broader market does and how that translates into.
So markets are on that edge of the cliff. Like I said earlier in the session, I could flip a coin and probably be more accurate in my opinion at this point. We'll just have to wait and see. But if the market bounces, I like that Kiwi long. I like that Kiwi long, and I like it long against Swiss franc the most. But if the market keeps dropping, I think you can be long dollar. I even think you can be long yen in that situation. And short Aussie looks like it is a clear play. Everyone have a great weekend. Let's be ready to make some pips. And I think it's going to start on Sunday next week. Goodbye, everybody.